Hi, dear viewers. I would like to welcome you all to today's market discussion. Now, what we can see is that at previous weeks we have some very important, news, and because of that, we have seen some many of the, market structural movements has been altered. There had been many kind of movement we have seen on global market, especially in commodity, because when any geopolitical scenario happens, then it's very hard for the markets to adjust, and it actually creates some many kind of imbalances. And due to these imbalances, the market acts strangely. So many unwanted moves is been expected. That's what we have seen in the last week. So here I would like to share these things, these findings to you, so that we all can be on the same page and we can have a fruitful discussion related to markets and its structures. So I hope it will be a very interactive session. So I guess all the sharing's been done. I guess we can jump into the main video. So as we discuss on the market, the first thing we do is that we check out the previous week's yeah, fundamental news, and then we check what will be the news that coming in the next week, and according to that, which kind of important market levels can be breached or may be respected. That's what actually we discuss according to different currency pairs and commodities. So let's just hop in. First of all, we have seen that last week we had Empire State Manufacturing Index news for US dollar, which was a little bit, I would like to say a negative, but due to its forecast was like minus 6.4, it was positive than the forecast value. So it actually showed a little bit positive. But the thing is, we have to think that how it actually differentiates according to the previous value, right? Like previously it was 1.9, now it's 4.6. So let's just hop in for the gold value on this 16th of October, let's just say. Now what we see that on 16th October, specifically on US session, we have seen that it was actually moved a little bit sideways, and we have seen that some because the news was positive than the forecast, but it's actually less than the previous, so that's why it actually created some mixed kind of sentiment over here. Now what we see after that day, which is in 17, it was a little bit bullish. Sorry, the dollar was bearish, so gold was a little bit bullish. Okay, so let's just see how it goes on the next day, because the next day it was CPI. There was CPI report for NZD. There was Australian dollar monetary policy meetings. There was earning reports for pound. There were CPI reports for Canadian dollar. There were retail sales report for US dollar. Now the thing is, on the 17th October, we have seen that on US dollar, the retail sales report was, I would like to say, -2, because previous value was 0.9, it was 0.6, which is less than that. It's merely positive than the forecast value. Now, forecast value is kind of like tentative value, and it's imaginary value. Okay, the present value, or I would like to say the realistic value, is the previous value and the present value. Okay, so that's what we can say that it could have been act a little bit negative. Now on 17th, we have seen that too. Like when the news got released, gold actually moved a little bit bullish. What we can see over here. Now it was sideways overall. That's what we can see. Now for Wednesday, we see there was speech on RBI Governor Bullock. There was industrial production news for China. There was CPI report for pound on that Wednesday. which I guess was kind of like it was as it is like the previous value, so no change. On Thursday, we had Australian dollar employment related news. We have unemployment claim news on every Thursday. That's what we see. And also, we have Federal Reserve Chair Powell speeches on Thursday. Now, we also had pounds retail sales news released on Friday, and we have seen a little bit, you know, bullish stance for pound on 19th October over here after the Federal Reserve Chair Powell speeches been happened. So we have seen that the gold rose more than 250 plus pips. So it was kind of like a huge move. Then it continued this bullish stance on the next day on Friday too. But due to the weekly thing, we have seen that on the weekly chart, previous 2 weeks was bullish. Now I hope you got guys, if you don't forget, on the lastly we have expressed our concerns that if the price moves below these levels, then there is a high chance it will go initially this, and moreover to this level. Now the thing is, price moved to this level on H4 chart, then it was our prediction that the price, if moves above this and closes H4, then it could it has a chance to touch at least this level and then furthermore this level, which actually did after a week. So the levels that we actually identify over this discussion is very important because we denote these levels according to our experiences and obviously how the market respects and behaves on those levels. So obviously these levels are very much liquidity prone and very much important. So let's just hop into the next week news that's gonna come. On Monday we have New Zealand dollar bank holiday. So what we can see is that there will be a increase of supply for New Zealand dollar. That's what we can say. And on Tuesday, we have many couple of news on, like, let's just say on pound, we have claimant count change news. On euro side, we have French flash manufacturing PMI news. We have German services and manufacturing PMI news as both. We have Reserve Bank of Australia Governor Bullock speeches on that particular day. And on the same Tuesday, we have flash manufacturing and services PMI news for US dollar as well. On Wednesday, we can say that there will be the Australian dollar CPI will get released. We have business climate news for Eurozone, especially for the Germany will be released. And on the Canadian side, we can say that on Wednesday, there will be Bank of Canada monetary policy report. Then there is Bank of Canada press conferences. And on Thursday, we have Fetcher Powell, especially we could say that on the Wednesday night, we will see US dollar is gonna crumble a little bit more because of the Fed Chair Powell speeches. Now on Thursday, on the day forward, we will see Euro news, especially it has monetary policy statement and main refinancing rates. We have advanced GDP news and unemployment claims news, and we have ECB press conference news on the same date as well. So I would like to say that Federal Reserve Chair Powell and ECB press conferences, like one of the two most vital economical rate decisions and monetary policy decisions is going to come on these days. So it will be very much crucial time for traders and investors to put a decision because the market will actually work in a different way, I guess. Now on Friday we have core PCE price index and we have consumer sentiment news for US dollar as well. So let's just look to the news that's gonna come on the upcoming week. Like let's just on Monday, we have Eurozone consumer confidence. On Tuesday, we have these news, especially for oil. We have International Energy Agency World Outlook news gonna release on Tuesday. Likewise, on Wednesday, we will have new home sales news. On Thursday, that's what actually we have spoken that there will be ECB rate decision news. On Friday, we have China's industrial profit news as well as Japan's CPI news and University of Michigan consumer sentiment news gonna release. So this is the facts that news releases that we are gonna expecting for the next week. Now let's just hop into the some of the fundamental facts, or some market related facts, because after that we would like to attach these thoughts into the charts and the important levels that we actually been drawn out on the chart. So let's just hop in. Let's just say for Euro USD, the 200 the 50 SMA actually crossed the 200 SMA death cross. That's what actually been seen on the day one time frame. আমি আমি পরে কথা বলছি। So the 50 SMA actually crossed the 200 SMA. Now we call it death cross, but the fact is that it actually been a little bit trembling, and also it must need to touch the 50 SMA or 200 SMA or retest or rejection from these levels to confirm this cross. Otherwise, it will be nothing just but a kind of like wax. Okay. So for Euro USD, let's just have a look on the Euro USD. Like on the daily chart, it's been adjusted. Like for example, like the 2 month, it's been actually on the bearish tone. Now the death cross happens, so there is there's a chance that it could go a little bit bullish for this week or so on, just to adjust these bearish movement that has been happened for the past 2 months. So on that contrary to that, I believe that from 1.06 level that actually the level market actually got closed last week, there's a high chance that it will rise at least 70 pips up to 1.067 initially. Then furthermore, it has high potentiality to touch this level, which is 1.075, which is actually 175 pips above than the previous week's closing. So I guess it has the potentiality to reach furthermore, but the last 2 months it actually got bearish. Okay, so now in a glance it couldn't retrace back at a very high stance, right? So it will take a little bit time, but I would like to suggest if you trade Euro USD for the next week, there is ECB rate decisions coming, so you have to be very much cautious about putting any entries on Euro USD, and I would suggest personally to stay out of any kind of Euro pairs, because I'm expecting some high-end spikes for Euro USD. Let's just say it also has a need to stop hunts on these bearish levels. So I feel that there will be a high spikes over this, and then rejection, and then a little bit bull run, and then rejections. So overall, the next week there is a high chance the price will be a little bit spiky and sideways both. So I guess putting any entries on here on this situation is kind of like risky, because what I feel that if firstly it's gonna go a little bit up, then for the retracements it's gonna go down and then again up, so it will be kind of like zigzag and kind of like sideways movement overall at the end of the week. Now for pound, let's just hop in a little bit. Now for the ECB meeting, uh, it's been clearly on the writings that however the central bank may reinforce the message that rates will remain higher for longer to tame inflation. So they will, especially the ECB president Christian Lagarde, will actually stay the outlook of their many ways of financial junctions or factors that actually affecting on the sorry global scenario. So sorry. So it also informed kind of like statistics that there's only 12% probability that the rate hike will happen by the end of 2023, and the rate cut will begin on the April. Now, thing is, for the eurozone, if ECB thinks that it needs to tame inflation, and to do that, if the rate remains higher and keep remaining higher is a good stance, then they will not hesitate to actually rate increase their interest rates, because it's a matter of 24 plus countries and also their internal businesses in between the global geopolitical situation that we are right now. Because in the one side there is Ukraine and Russia engaged, and on the other side there has been Israel and Palestinian conflict, though it's been happening like for example 75 years. Now on the other hand, we are seeing on the Africa, many of the nations that were under French colonial powers, that's been actually breaching it. Uh, and also on the South American side, there has been some alter events that actually makes these situations from all over the world a little bit complex. So that's what I see. Trading a currency like euro, which has actually 24 country as a participant, is a little bit tough right now. So I would suggest to stay away first. Now we have US GDP data and PCO report, which are likely to shape rate expectations. So the writers of this blog is actually thinking that there is a 38% probability of a 25 basis points hike from the Fed at the end of 2023. Now, how these things can actually happen? Because it's actually been saying, some mixed kind of like sentiment. Like if you are that much confident enough, you actually don't need to put a 38% number of probability, right? You will actually tells that yes, my employment data should have to be this. My GDP data should have to be this. These are our expected levels to consider the economy is in a good pace to rise interest rates. So they could have declared that, but they haven't. So just let's move on to the next chapter. So Fed flags persistent inflation as possible financial risk. Now Fed also says that deposit outflows have largely stabilized since March. Because after March, Fed actually put some brass along many kind of like financial transaction authorities, like we know about FTX, MFF, and many other factors. So this had been happening since March, and these thing actually allowed deposit outflows, and it has been stabilized. Now, also, Federal Reserve is eyeing on the worsening geopolitical tensions could hurt global markets. Now, this is the financial stability report for October 2023. I guess the whole scenario is been described over here. Now, for the better understanding, I'd like to share these links to you guys so that you can have an idea. Now, there's an article about macro markets high forever by Philip Maldia Madsen. Now, he has been telling that the central banks are pausing their interest rate hike cycle, but inflation is not back at the 2% target. Now, the situation is something like to that to check the inflationary numbers, different federal, governors is trying to has been tried to put their interest rate on hike. Now, by doing so, they had expected the inflation will be checked in a sense, but it actually, deteriorated in some cases, and inflation are actually on the very, rise in some cases in some countries. There has been 40 to 60% plus inflation been recorded too. So there could be some questions on how interest rate rise can check inflation, because we all know the rise of inflation can stimulate the rise of interest rates. Now, if interest rate rises, inflation should have go kind of like increase, but it's not happening that way. Why? Because in the overall market, there has been some structural changes of application. Like for example, in the previous thing, in the previous moments or months, we have seen that there had been some rules on using Swift transactions. Now, with some many deliberate events and unwanted events, it had been changed, and due to that, it has been changing to policy changing policy to such extent that uh, that can actually opt many ways outside the traditional ways, so that it can actually check the inflationary parameters that actually is tending the inflation and interest rate to get more rise, right? Now thing is, To check the scenario, you induce more supply of the currencies in the market, and when you do that, there has been more personal loan or credit loan gonna increase, and for that the payables will increase too. And as long as you put some, brass on different foreign transactions, put some sanctions on many business organizations or institutions, so you actually control the inflows and outflows, so that in numbers the inflation got to be kind of like checked. But this thing mathematically and economically is true, but in reality it takes time to adjust, because it's not every time that people have money in their pocket and they would try to spend it, right? They sometimes would want to invest, they would sometimes want to save, they would sometimes wants to in give loans to people. So there could be many economic decisions happening depending on many scenarios, right? So on the current context, what they're expecting is that the more interest rate rise can check a little bit inflation. But they are thinking, they have thought on thinking to pause the interest rate hiking cycle, though the target to reach the inflation downwards to 2% is still a long time to go. So this is the Federal Reserve Fund rates expectation. This is the current market pricing today. This is what had been on the June. And this is the target rate. That's what they are actually been eyeing on. Now, how these things can happen, that's also have some logic too. Let's have a look. Like the job gains remain strong, the job markets remains tight, but it's cooling. Disinflation is intact but slowing, because we have seen this curve is gonna go on the lower side. And the longer dated, like for example, 10-year, 20-year, 30-year government bond rates, it's actually been touched the Fed's rates. So usually it actually um, be a little bit less than it, but it actually been touched. So alternate scenario has been happening. So these are the reasons why Federal Reserve is thinking kind of like alternate scenario happens, that if interest rate rises, inflation will be on their grip. Now, US bond yields have hit 16-year highs. Now, in between these global tensions, US bond yield hits high. How? Because when geopolitical tension happens, then at that time people and investors wants to secure their funds, wants to secure their investments on their trade. So because of that, they turns to gold, which has been uh, labeled as safe haven for many centuries of human civilization. Now some of them also trust U.S. bonds, because only U.S. has has been approved like globally, that its currency has been pegged with gold. So that's why for safety and security these things happens. And the more geopolitical tension rises, I guess the more gold prices has the possibility to go bullish. Now we have seen some Bitcoin jump on the previous week. It actually exceeded 30K mark. Now, how in this thing it actually been happened? Because as a investor, when you get funds, you also will not remain keep quiet with those funds. You also will need to invest somewhere where you can get a quick return or a marginable, sustainable return, right? So for US, when it's getting funds or bond purchases, then obviously they would like to put their money on something which is on their grip, and obviously it can be very much logical too. So I guess that actually stimulated Bitcoin related bullish sentiment, and we have seen some bullish turns on BTC and many other crypto pairs last week too. Now we also would like to share you these articles so that you guys can have a look. And don't forget to join our Telegram group over here so that we can all get connected. And for any kind of like, questions or any ideas or any upbringings you guys have related to market chart and sentiments, you can always bring up over here to our Telegram group. And also we have our virtual office designed in the spot for you guys only. So here you can have a look to what it's kind of like metaversic environment. But over here you can sit here and have a look to these YouTube videos through which I can say that yeah. So I guess you can see all these things that we are actually sharing. Now, Mr. Raymond James, he also been seeing strong consumer demand figures for US dollar. So I guess for that actually sums up why the clients or investors are still choosing US dollar for one of for a portion of their investments as a safe haven, because the US dollar has a very good, strong in-house microeconomic balanced ecosystem of consumers that actually spends a lot and spends very, crucially, that actually affects global economy. That's the most important part. So, so that's kind of like gold news. Now, Brent crude is US $92 per barrel, which is going to give us further inflationary shocks because the more oil money, the more the oil prices increases, the more inflation should get rise, and the more the governors of federal institutions would have the chance or scopes to increase their interest rates too. So global debt, government, corporate, private, now stands to 397 trillion, which is actually 336% of global GDP. Now, these actually things are kind of like imaginary figures or kind of like unrealistic figures too, because you have $1, but you spend on $4. Now, how that extra $3 came? That actually came from credit, that actually came from trust, that actually came from economic activities of different countries and many, geopolitical or political or country to country or business to business decisions. Now, when we see that three times is the global, three times of the global GDP is actually is the global debt, then obviously it's thing. It actually creates a mistrust among the local currencies or the paper-backed currencies, and it actually create more trust on crypto related issues or blockchain related currencies, which is actually all believe that will come in the future by any chance. Now there is another important fact, that's what actually I have been mentioned over here, that the Fed losing its control of gold prices. The Federal Reserve with other main Western central banks are losing their ability to control the gold prices, because it's been like 30 years ago Asian demand made up 45% of the gold transactions, but now Asian demand is approaching 60% with China and India in the driving seats. So even though Australia being the one of the finest and the biggest gold producers, but the consumers who actually consumes, takes, they are now in control. That's what actually been in the article you have, I guess you have seen. So I'm pasting this article for you guys so that you all can have a better understanding after this session. Now, many of the economists think that there will be a recession coming, but this guy Wolf Richter has been saying that he is not seeing that chance. Why? Because to him, when such kind of recession thing happens, then the unemployment actually rises like 3 or 4 times. So when these 3 or 4 times unemployment increase happens, And at that same time, inflation and interest rates figures are kind of like dismantled than usual. Then only there is a chance of recession. That's what Mr. Victor believes. Now, what we see here also that the unemployment figures is actually been kind of like same to than that of the good times that actually been recorded before 2020 events, right? So as the employment figure is right on track, so he's still believing that there is no chance for the recession, and he is very much intact according to his statement. So I have put these links over here for you to better understand. Now we see some US dollar price charts. Yeah, for Euro USD, this is the channel that's been maintaining. For GBP USD, it also been on the bearish side. Now there has been some, hopping thing happen. For USD CAD weekly chart, we have seen that it's actually broke a little bit of these triangles. So yeah, for the longer term, more bullish things gonna happen. For USD JPY daily, it's been on the brink of the higher levels that we are seeing over here. Yes, so exceeding this, it will be its first target, I guess. So for your understanding, I have put these article so that you can have an idea. Now uh, WTI like crude oil, it's also been on the bullish. That's what they are expecting for GBP, or they are expecting some downwards movement. So that's why I am putting these two links over here for you on our Telegram channel so that you can have a better understanding later on. Okay, so let's get back to the chart because we have a very little time. Okay, okay. So let's just say for gold, we have seen that from the daily chart there has been some significant move happened. Now for further continuation, if happens, it has the potentiality to breach these highs over here at 2050 level, but for that it has to have some H4 closing above 2000 level. Now we are talking about like 500 pips, right? From here to over here. Yeah, from 500 pips. We're talking about like 500 pips expected movements on bullish side. Now, what could be the alternate side if that movement doesn't happen? Now, we have seen that these level is been marginally respected last week, which is 1970. Nearly on 196 level, it actually you know, been go a little bit bearish, but it broke it on 1970. Then it touched 1990, and then it's actually in between them. Now, what we believe is that it can have a chance to touch 1950 or 70 level once again, and then from there that level it can have a potentiality to touch 2050 level in the upcoming week. Now for the alternate scenario, if the price goes below these 1950 level, any H4 closing happens below that, then I believe that it will initially touch 300 pips below 350 plus pips below at 1910 level, and furthermore to 1880 level. So we are talking about the alternate side bullish and the expected side to be alternate side to be bearish and expected side to be bullish over here. Now let's just see for Euro USD. That's what actually we have mentioned earlier that our expected direction for Euro USD could be like bullish, and for that it has a chance to at least go to touch 1.07 levels. But if by any chance any H4 candle closes below this level, which is 1.05, then I believe there is a high chance that it can touch this level, 1.045, then 1.04 levels gradually. So for Euro USD, our main focus should be on the bullish side, but alternate side is on the bearish side from 1950 level, sorry 1.05 level. Any closing H4 below 1.05 level could stimulate its bearish momentum. Now for GBP USD, we're also thinking on some bullish prospects. Now that happens when there is a chance that it goes above this level, which is this 1.226 or 225. So above this level, if an H4 closing happens, then we could say that there is a chance to go more high or more bull up to 1.24, which is 140 plus pips, and furthermore 330 plus pips above at 1.26 level. But we also know that for the past 2 months, it's been on the bearish side, and there's been just 1 or 2 weeks it's on sideways, and also not that much strength on the bull side. So there is also a high possibility that it can continue its bearish, movements. And for that, I believe it has potentiality to touch, if by any chance, if we see that GBP USD has been closing below 1.21, then only, I repeat, then only we can say that there could be some, bearish movement up to 1.2 level, which is 100 pip bearish, and furthermore up to 19 or also 1.18, which is actually 300 pips below 1.21. Now that's our alternate side. Our main focus could be that GBPUSD could get bullish if any closing happens on H4 above 1.22, then it can have a chance to continue it up to 1.23, and then let's do 4, and then let's do 5. So we are eyeing for 100, 200, and 300 pips on the bullish side if we see there is a significant US dollar weakness been happening. So for USD CAD, as we have seen that it's been on the bull run previously, but right now it's kind of like on the sideways. If we see any closing above, sorry, 1.385 or 1.3825, then we have an expectation that USD CAD may touch 1.4 psychological level over this. And if by any chance it closes H4 below this level, which is 1.365 or 36, which is this, yeah, so then it can continue to go more bearish up to 1.3485, then double 3646. So on the bearish side, we're eyeing for up to 1.4, and for the bearish side, I guess 1.336 is kind of like okay for USD CAD. So far, it is right now. Now for USD JPY, we have actually been informed that it's on the brink of kind of like mixed scenario. It needs to do some closing above 150 level, and when it does, it can go harshly up to 160 level, 165 level. But by any chance, if it closes below 148 level, okay, any H4 candle closes below 148 level, then it has a chance to go on the bearish side up to 145 level, okay. But if not, if it exceeds its H4 closing above 150 level, then it can go 155 level, above on the bullish side. So that's what we can say on the currencies and the commodity as on gold, how the market could behave next week. So I guess that's all from us for you guys now. Kindly let us know that how we can improve our interactive communications and how we can how we can expect how we can actually how we can actually more answer your queries related to market and charts, and also for any new learners, how we can you know how we can arrange you different contents, because as you know, if you go through this linktree slash triple pips, that's our linktree link. It will show you our affiliation with the Web3 company. It will also show the contact details of me as an admin. It will redirect you to our YouTube, Telegram channel, and LinkedIn group and Facebook group as well. It will also have the links to go to visit our virtual office. And also, if you guys want to learn and access to more PDFs and learning contents on, you can have go through this link because it has the trading library and hub. For any training, you guys can contact FWE course course related websites, and it is our socials through which we can actually share our point of views, especially for Twitter. If you follow us on Twitter, any tweets that actually we think that it's suitable for our markets, we just share over Twitter. If anyone wants to know how our earning programs can work, you can actually go through this link. And for any kind of prop firm, these are the prop firms that are affiliated with us. These are the brokers, trading brokers that are affiliated with us. So you can have all these links in just one place. So don't forget to click on these links. And these links has been on our platform, so you can obviously access it. But for any kind of issues, any kind of questions, any kind of queries, don't forget us to reach us. And for obvious reasons, always be with us. And don't forget to like our channel and subscribe. So that's all for now today, I guess. Have a nice day and week ahead. We will see you next week. So bye bye.